Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is food supply invoices factoring for Winnipeg distributors. When you're delivering perishable goods, produce, dairy, frozen items to grocers, restaurants, and institutions, payment terms can stretch 30 to 60 days, yet you need cash immediately to pay suppliers, cover freight, and manage spoilage. Invoice factoring can be the lifeline that turns your invoices into working capital, ensuring you keep shelves stocked and deliveries on time. 1. What is invoice factoring? You sell your approved customer invoices to a factoring company. They advance 80-90% of each invoice's face value, often within 24-48 hours, and collect payment directly from your customers. Once they receive the full payment, they remit the remaining balance to you, minus a small fee, typically 1 to 3%. 2. Why Winnipeg distributors benefit? Speed to cash. Access funds immediately rather than waiting weeks for payment. Crucial when you need to purchase perishable inventory or cover seasonal freight surcharges. Growth financing. Use factored proceeds to expand into new product lines or geographic markets without tapping bank lines or personal capital. Outsourced collections. The factor handles dunning and dispute resolution, freeing your team to focus on procurement, logistics, and customer service. BPD. Credit risk protection. With non-recourse factoring, the factor assumes the risk of customer default, shielding you from bad debt losses if a buyer goes insolvent. DT. How the factoring process works. 1. Onboarding. Apply with a factor that specializes in food service or grocery distribution. They'll assess your major customers' creditworthiness. 2. Invoice submission. After each delivery, forward the signed invoices or proof of delivery documents. 3. Advance funding. The factor verifies and advances 80 to 90%, often the same or next business day. 4. Collection. They pursue payment under your original terms. 5. Settlement. When your customer pays, the factor remits the remaining 10 to 20% minus their fee. 4. Choosing the right factor. Industry expertise. Seek a partner experienced in perishables with knowledge of spoilage holds, chargebacks, and seasonal demand swings. Advance rates and fees. Compare advance percentages and sliding scale fee structures that decrease as your monthly volume grows. Recourse versus non-recourse. Decide whether you need full protection against buyer non-payment, non-recourse, or prefer lower fees and retain some credit risk. 5. Best practices for maximum value. 1. Clean invoicing. Issue precise invoices immediately upon delivery, including batch numbers and weight confirmations to avoid verification delays. 2. Customer notification. Inform buyers of the factor's role so payments are routed correctly and on time. 3. Blend financing. Combine factoring with a small receivables line of credit for peaks in volume. Use factoring for rapid needs and lines for predictable flows. 4. Monitor metrics. Track factoring fees as a percentage of sales and measure days sales outstanding DSO before and after factoring to ensure ROI. 6. 3 action steps. 1. Audit your top accounts. List your 5 largest customers by volume and their typical payment terms. Gather sample invoices and payment histories. 2. Solicit term sheets. Approach 2 to 3 factoring firms that service the food distribution sector. Compare advance rates, fees, recourse options, and onboarding timelines. 3. Model cash flows. Simulate your next 60 days of supplier invoices, freight costs, and payroll against potential factoring advances to confirm you'll cover all obligations and maintain buffer liquidity. Invoice factoring transforms slow-pay food supply invoices into a strategic liquidity tool, keeping your Winnipeg distribution network fully stocked, handling perishability risks, and enabling you to seize growth opportunities without adding long-term debt. If invoice lags threaten your supply chain, factoring may be the solution to keep your operations fresh and your business thriving. I'm Haider Malik. Thanks for listening.